Awesome. That is great. Joining us now, George Gammons, Jackson Market City President for the Citizens Bank. George, thanks for coming on.
Thanks, Gerard. It's great to see you again, my friend. Before we start talking banking, I was going to tell you the last time I did a radio remote, I was 7 years old at my grandfather's Western Auto Store downtown Vicksburg.
Awesome.
So it's been 50 years since I've been in the booth. Glad to be back. Glad to be with you.
That is fantastic. Well, it looks like we got a great event going on here today. I got here, arrived just as a break was happening here in the lobby of the conference center, and looks like great attendance.
I think he said we have a 30% increase over last year.
Awesome.
So rooms full and good speakers. Great event.
So as a banker, what do you expect to learn? What do you get out of an event like this?
Well, the networking once a year,
Sure.
getting with the top bankers here in the state of Mississippi is always a great opportunity that doesn't come around often. So it's good to meet, see what's going on in the industry. We've got 3 speakers on the national level. One just listened to talking about community banks and the importance going forward, especially competing with credit unions and others. And some economists are going to speak here in a little bit. So just getting a macro view of things as well as the networking.
Well, community banks in particular in the state of Mississippi are really vital to the Mississippi economy.
Absolutely. As the banking industry consolidates, you've got the larger banks moving in and gobbling up, so to speak, some of these smaller banks, but it's crucial that you have that local decision making, especially in these smaller markets around the state. I mean, we're relatively small state with one major urban area, and community banks play an integral part of our system of finance here.
Yeah, no doubt about it. What about the loan deal flow? What's that looking like these days? We just had Senator Boyd on talking about it. She's on the loan committee at a bank.
Yeah, well, everybody, the talk of the day is interest rates, and they're on the upward swing right now. You're probably looking at another 75 basis point hike by the Fed 1st of November. So that's pricing some of these younger folks out of the market, especially on the mortgage side, are making it tougher to afford that first home, which that's a concern. At the same time, my first mortgage was in the 6% range, 40 years ago, and it's not a bad rate. We've just gone from 100-year lows to maybe 30-year lows, but for each incremental increase in prime lending rate, that's affecting credit cards, your small business owners that have floating debt, lines of credit, things of that nature, as well as your fixed rate loans on new projects, new investment in buildings, equipment, things of that nature. So it will take its toll. It already has, but I think you and I talked about earlier, the consumer confidence level is still very high, and that may add more fuel to the fire for the Fed to keep raising rates here.
Yeah, it's crazy because you look at how the market reacts, which maybe is not the perfect barometer, the perfect measurement, but the future started out in the green, and of course yesterday was a huge day, and there's lots of different explanations for that. Future started out in the green. Some major banks released their earnings reports, and they stayed above water, and then all of a sudden the consumer sentiment data came out, and the markets plunged on that. That's actually good news. The consumers still feel good about spending money, but what they read into that is that, okay, that means that the Fed's going to continue their hawkish policy and raise rates, because if the consumers still want to spend money, that means we're likely to have a continuation of inflation. And so you got all these factors. It's got to be tougher times, at least today, for your industry, is it not, with all these dynamics?
Well, the difference, we're technically in a recession right now. We have 2 quarters of economic decline, yet the job market has not experienced the losses like you would normally see in a recession. In fact, it's just the opposite. There's not enough people to fill some of these jobs. So in that perspective, it hasn't been a full-blown recession like previous recessions, but it's just a matter of time till you have that trickle-down effect with these higher rates. The past dues, the loan losses that normally come with that, haven't really seen a spike in that yet, but that could come into next year. And how prolonged, an economic downturn may be, to be determined. So, and the big question is after November, do we have another rate hike come up before the end of the year or early next year? And how long does it continue before we start to see that peak reached and start to come back down?
Yeah, and among the news this morning from these big banks was that they're all increasing their loan loss reserves, anticipating maybe tougher times ahead.
Well, that's a concern conservative thing that banks do in this type of environment. Of course, we've got banking regulators that play a part of that with their annual examinations, so that'll trickle in over the next 12 months. And, I think that's probably the consensus.
Got it. George, appreciate you coming on. Good to see you.
It's great to see you too, my friend.
George Gammons, Jackson Market City President for the Citizens Bank. We are at the Oxford Conference Center for the Ole Miss School of Business Banking Symposium, the Element Well Studios. We're taking a break right here. We're coming right back. Stay with us.